All right, welcome to Market Pulse. So, what happens when one single signal from the Federal Reserve sends a massive shockwave through the entire market? Well, that's exactly what we're going to break down this week, what it means for you and for your money. Look, we all know there's a ton of noise out there, right? So, our job here is to cut right through all of it. We're going to focus on the key technical levels and the market moves that really matter, so you can see the bigger picture without all the static. So let's get right into the big story. The entire market, and I mean everything, did a complete 180 last week. Why? Because of Fed Chair Powell's speech at Jackson Hole. He hinted that rate cuts are on the way, and, well, the market absolutely loved it. But here's the thing. If you look just a little bit closer, the message is actually creating this massive puzzle for investors. It's not as simple as it looks. Okay, let's unpack this. On the surface, Powell's message sparked a huge rally. But underneath it all, the economic data is telling a totally different and, frankly, a much more concerning story. So, yeah, let's dig into that conflict. And this right here, this is the heart of the problem. It's like a tale of two completely different markets. On one hand, you have the bulls, right? They're celebrating, stocks are up, crypto's rallying, all because of potential rate cuts. But then you look at reality. Asset prices, from stocks to your house, are already at all-time highs. Government debt is through the roof. The money supply is huge. So you have to ask yourself, why on earth would the Fed cut rates now? It just doesn't add up. And that, my friends, is the billion-dollar question. And hey, if you think the word bubble is maybe a little too dramatic, just listen to this. This quote isn't from some random market skeptic. It's from Sam Altman, a key pioneer in the AI boom. When the guy who literally helped build the hype is sounding the alarm, you've got to pay attention. That is a huge red flag. So this all leads to a really kind of troubling idea. What if the Fed sees a recession coming? And what if they're trying to get ahead of it now? The huge risk here is that by cutting rates, they're just pumping more air into an already overinflated balloon. They might be passing off this financial time bomb to the next administration, hoping it doesn't go off on their watch.
So how is all this uncertainty showing up in the stock market? Well, the major indices are sitting at some incredibly precarious levels, and there are a few key numbers that tell the whole story.
For the tech-heavy Nasdaq, here's the number that matters. 23,750. That's the critical trend level. If the index breaks below that support, it could be a major signal that this incredible rally is finally running out of steam.
Meanwhile, the S&P 500 is flashing its own warning sign. It closed out the week with a hanging man candlestick pattern. Now, for technical traders, that's a classic sign of potential exhaustion, a warning that a reversal could be just around the corner after a big run-up.
Now, what's interesting is the Dow Jones. It's actually holding up a bit better than the S&P and the Nasdaq. It's showing some relative strength. But, and this is a big but, we have to remember it's not an island. If the broader market starts to roll over, the Dow is pretty unlikely to remain immune.
So, with all these warning signs flashing in the stock market, you might be asking, where could investors look for safety? Well, let's turn our attention to the traditional safe havens, gold and silver.
The case for precious metals is being driven by some really powerful real-world factors right now. You've got simmering geopolitical conflicts, relentless buying from central banks looking to get away from the dollar, a global money supply that just keeps growing, and just a whole lot of economic uncertainty. It's creating an incredibly strong backdrop for metals. And the technicals? They totally agree. For gold, the line in the sand is $3,300 an ounce. As long as it holds above that key level, the uptrend remains firmly intact. And get this, the strength isn't just in gold. We're watching the gold to silver ratio and it's trending down. So what does that mean? It means silver is starting to outperform gold. And historically, that has been a powerful bullish sign for the entire precious metals sector. Okay, so from the world's oldest safe haven to its newest, let's pivot over to crypto. Digital assets also got a nice rally from the Fed's news, but now they're facing their own critical test. Here's a quick snapshot of the key players. Bitcoin is at a serious make-or-break level, 115,300. Below it, the outlook turns negative. Above it, the bulls are back in control. Meanwhile, you've got Ethereum and Solana showing more relative strength, positioning themselves as potential leaders if the market does turn higher. But for anyone in crypto, the takeaway is crystal clear. All eyes are on Bitcoin. As the market leader, its chart is flashing a warning sign of a potential major top.
Its next move will likely dictate the direction for the entire crypto space. So we've connected the dots from the Fed's pivot to the stress points in stocks, metals, and crypto. How do we put this all together? Here's what you need to watch for in the week ahead. Here are the 4 big things for your watch list. First, that high-risk conflict between the Fed's policy and the bubble-like conditions in the economy. Second, the technical weakness in the major stock indices. Watch those support levels. Third, the fundamental strength in precious metals as a potential hedge. And finally, Bitcoin's decisive moment around 11,530. That's the key indicator for the entire crypto market. And this leaves us with one final critical question. We are at a really fragile and fascinating inflection point. The market wants to rally on the promise of cheap money, but the economy is flashing all these signs that a major correction might be long overdue. So, which force is going to win?
That's our breakdown for this week. The path forward is uncertain, but by watching these key dynamics, you'll be better prepared. Thanks for joining our Market Explainer. Your subscription and likes will be appreciated.